Welcome to FX Signal Team. Today, we are going to start 7th chapter of part 2. The main topic of this chapter is tailed bars. Let's start. As price action traders, our focus is on reading charts. We're literally reading the market via its price movement. Therefore, you need to understand more than just pin bars, inside bars and fakies. You need to start looking at almost every bar, especially on the daily chart, as a potential clue as to what the market might do next. Having said that, it does not mean that every bar is worth trading or risking money. It just means you may be able to map the market from them and use them to help you figure out what the market may do next. It's really easy, guys. If it's not a pin bar, but it has a tail, then it's a tailed bar. However, do not go out and blindly start trading tailed bars. The reason we're introducing this concept is to help you learn how to read price. That said, you can sometimes trade tailed bars. Sometimes you will get a nice bullish or bearish tailed reversal bar that doesn't quite qualify as a pin bar or fakie, but is still a signal. We will discuss these in more detail later. I would even go so far as to say that the foundation of the way I look at the market is tailed bars. Every move that happens seems to come off a rejection or false break in the market. Indeed, almost every big move in the market is preceded by a tailed bar of some type. Key point: I'm confident that at least 70% of what we do is reading price as opposed to trading it. The tails on a bar or on a series of bars can convey a lot of important meaning, so as a price action trader, it's critical we understand how to interpret this. Remember, trading price action is not always about pulling the trigger on a setup, it's also about reading the market's price action and interpreting what it's saying. Interpreting and trading tailed bars. The tails on bars are important because they can show rejection, reversal, exhaustion, or indecision. We can learn a lot about what a market is doing and what it might do next by interpreting the tails on the bars. Specifically, daily chart bars are important because we are mainly concerned with the daily chart trend and daily chart key levels, as you have probably realized by now. Even if we don't have an obvious pin bar or fakie signal, the tails on bars can help us develop a bias on a market and clue us into what it's likely to do next. In the chart image below, note all the obvious upper tails that clued us in that the market wanted to move lower. Of special significance is the large tail that rejected 105.35 following the first rejection of it. See where it says rejection of resistance on the chart below? That was not necessarily a specific price action signal, it was almost a fakie, off by about a pip. But what it was a bearish tailed reversal bar. A bearish tailed reversal bar is simply a bar that doesn't quite qualify as a pin bar, but still has a significant upper tail on it. When we start seeing that one side of the bars have consistently longer tails that are clearly protruding up from the surrounding price action, as in the chart below, it's a strong clue that one side of the market is being rejected. In this case, the bears were holding the market down and pushing it lower on all attempts to break higher, leading to a significant decline. Important note: since a tailed reversal bar is a bit open to interpretation or discretion, perhaps more so than a pin bar or fakie setup, it really helps if you wait for them at levels of support or resistance, or maybe from an 8 or 21-day EMA, or a 50% retrace, You want to see some strong confluence behind them. It's important that you don't just go trading every tailed bar, because almost every bar has a tail. Hopefully, as we look at more examples, you will see how I trade these tailed reversal bars. In the chart image, we can see a nice example of trading tailed bars in line with the daily chart trend. The 8 or 21-day EMS had recently crossed higher, showing strong bullish momentum. Then we got a series of bullish tailed reversal bars, indicating that the trend would continue. These bars formed near the EMAs, so they formed at value and thus provided low risk or high reward entry points into the trend. These were bullish-tailed reversal bars. Even though they didn't have long bullish tails, they still had bullish tails showing rejection of lower prices and that were longer than the upper tails. So we can consider them a type of bullish reversal bar. Ideally, you will want to trade longer-tailed reversal bars than the 3 in the example below, but in certain trend situations like this one, with low volatility, these smaller-tailed reversal bars can work as well, if they are in line with the trend, of course. The following note on tailed bar reversals is critical. Now, don't think I can read your mind, but I've been trading and teaching over a decade now. I know what you're probably thinking. Niall, what about all the upper tails I'm seeing on this chart? What do they mean? Well, this is where you need to use some discretion and gut trading feel, along with a little common sense. If we have a clear uptrend in place, logic dictates that the bars with upper tails are not going to be as meaningful, especially if they didn't form at any key level of resistance, and especially if they are not particularly bigger than any of the surrounding price action. You have to develop an internal filter and feel for tailed bar trading, and I don't really recommend you try it on a live account until you have gotten very comfortable with pin bars and fakies. Tailed bar trading is a bit more nuanced and discretionary, as you can see. That said, once you get a feel for it, it will provide you with more trades and more profit potential. So remember, context is critical with tailed bars. Make sure the tailed bar reversal you are considering trading makes logical sense in the context of the market structure it's occurring in. You need to be very careful because you can easily start over trading with tailed bars and get out of control. This is why I strongly suggest you just take in the info in this chapter and come back to later, after you feel you have mastered pin bar, fakie and inside bar trading. Tailed bars are definitely a bit more advanced and I need you to be careful with them. Just be sure you only take tailed bar reversal that makes sense. Remember, as I said before, you should have some confluence behind them. Factors of confluence you should look for anytime you are considering a tailed bar reversal trade. The tailed bar is rejecting a key level of support or resistance. When trading a tailed bar counter trend, this is basically a requirement. The tailed bar is in line with the dominant daily chart trend and is formed after a retrace back to value at the 8 or 21-day EMA layer, or at a level of support or resistance. Tailed bar at 50% retrace level. The more pieces of confluence that line up, supporting your tailed bar reversal trade, the better. Let's look at some more examples. In the chart below, I am introducing you to my favorite type of tailed reversal bar to trade, the long-tailed reversal bar. These are bars that are not quite pin bars, because they have a tail on the opposite end of the bar that's a bit too long, yet they still have a long tail reversal on the other end. Look at the bullish long-tailed reversal bar in the chart below. Note it has a bit of an upper tail on it that basically disqualifies it from being a pin bar, but it still has a long lower tail showing clear rejection of value or support at the 8 or 21-day EMA layer. This was a clear buy signal as it was in line with the underlying uptrend and showing rejection. Also, note in the chart how we started getting a lot of bullish tails on the bars just before the uptrend really got going. You will often see the market tail out like this just prior to a trend change. Keep this in mind. In the chart below, we can see some more examples of tailed reversal bars. Note the key support or event area through about 1.3670. The bar marked bullish-tailed reversal bar was not quite a pin bar, but it did have a long lower tail showing rejection of a key support and event area. So it was a bullish-tailed reversal buy signal, and we can see it worked out quite nicely. The next bullish-tailed reversal bar marked on the chart formed off a near-term support level that had been holding price for about the previous 2 weeks. Note, this also was not a pin bar due to its large body compared to the relatively shorter tail. But it was a bullish reversal or tailed bar showing rejection and was in line with the existing upward thrust. We can see it led to a temporary push higher just before the market collapsed. Closing off the line. There's something called closing off the line that is a concept you need to be familiar with. It basically just means that if you see a tailed bar, or pin bar, or any potential price action signal with a tail on it, it's ideal if the bar closes off the line, meaning the tail protrudes up through the level or line and the close is back on the other side of the level. In other words, you want to see a nice logical or strong close in favor of the direction you want to trade in. For example, if you are trading a bearish-tailed reversal bar at a resistance level, you do not want to see the close of that bar be above the resistance level. You want to see it below the resistance level. This shows that price failed to close above the line and instead closed off the line, and this adds more weight to the trade signal as well as give you some extra reassurance. Final word on tailed bars. I hope that from the above chart examples and text, you are starting to get an idea of what a tailed reversal signal is and when to trade them versus when not to. The key point to take away from this chapter on tailed bars is that you do not always need a defined price action signal like a pin bar or fakie to enter a trade. You can also enter via tailed bars. However, they do take a bit more discretion and experience to trade properly. You should essentially trade them just as you would any other price action signal, with trends or from confluent points in the market, for example, key levels of support or resistance, EMAs, 50% retraces, etc. Whatever you do, don't just go trading every tailed bar you see. Slow down and ask yourself, does this tailed bar make sense to trade in the context of the surrounding market structure? Just as you would with a pin bar, fakie or inside bar, and if the answer is a resounding yes, then you may just have a high probability tailed bar reversal signal on your hands. Our next chapter will be event areas.